Hi, this is Keith Schneider, CEO of MarketGauge.com, and it's October 16th, 2022 edition of Market Outlook. So this week, the market definitely went through some emotional issues. One of the things, of course, is the extreme volatility on Thursday, where the market was down between 2 and 3% and closed up 2 or 3%. It hasn't happened like that in terms of the intense volatility and the big reversal also off of 52-week or year-to-date lows, a rally of that magnitude after a big gap down. Now, what's also interesting, of course, is the fact that the market has failed on Friday with any follow-through. Yet we still have a bullish engulfing pattern that is intact. So until we resolve, you can almost look at this as a very simple setup. If we can close for at least a day or two back over the 10-day moving average, which also coincides with the highs on Thursday, you would say you've got a potential bottom in place. However, with the action and the markets down as much as they were on Friday, down 3%, basically on a new closing low in the NASDAQ 100, we definitely have a mixed signal. The other thing to note is regarding the Bollinger Bands, both on price and real motion, we are not oversold either in the NASDAQ, the S&P, right, or any of the four indices. So with a failure here of the spike low on Thursday, markets could really sell off hard. So we're at a very interesting inflection point, and the compression here around that key reversal day or the engulfing candle pattern on Thursday is a very key area to watch, both on the upside and the downside. Now, with that, let's take a look at some volume patterns here, because those are also interesting because they are showing a market improvement over the last couple of weeks. So one thing you can see in terms of accumulation days versus distribution, we now flipped to a positive mode led, not surprisingly, by the Russell 2000. 3 accumulation days, 1 distribution, and the market still is in that engulfing pattern range. So you've got opportunity here across the board in terms of timing a good low-risk entry at an inflection point. Now, the other thing to note, on the flip side of the positive volume patterns, is the fact that if you take a look over the last week, what has led in terms of sectors, it's definitely risk off. So one thing, look at consumer staples. Up actually on the week 1.5%, right? They're down the least amount year to date, down only 12% or close to it. Healthcare is actually year to date doing the best. Now, what did the worst? So the flip side of that is discretionary spending, and you can see here that was down 3.8% over the last 5 days. The other thing is a spec sector, semiconductors, they were down 8% with all of the geopolitical news regarding semiconductors with China and the United States. So lots of pressure there. So net, you can see across the board here, we've got pressure on risk assets, and of course, the safety play such as consumer staples actually did well, a lot better than the market. So risk off is maintained looking at sector performance over last week. Okay, now moving on to market hotspots, more of a global view on things. What is interesting in this table is the fact that you can see that things such as China and certain commodities like silver and palladium got hit extremely hard. So energy definitely under pressure, especially clean energy, semiconductors, as I mentioned earlier. And of course, the big thing is China really got smashed, down over 8% for the week. All right, hope this all helps. As you can see, definitely a bit of a mixed read as to what the next direction is. We are at an interesting inflection point. If we can get above those Thursday's highs and the 10-day moving average, that could definitely mean that the October sell-off is finished and the longer-term seasonals for November, December, and January are starting to take over. So pay attention. This next week is going to be really crucial in determining what the big next move is. Because if we do get a failure, it could be pretty strong and definitely persist, much like what occurred in 2008. All right, hope this helps. See you next week. Good luck with your trading, and bye for now.